With the few years that I've been in the market trading, I've not traded for very many years, but at least more years than most of you, maybe who have come across the channel. So, according to my experience in those years, I know that when you decide to trade gold or any heavy security, it can be indices. By indices, I mean the stock indices like Nasdaq, S&P 500, Dow Jones, and the rest. Also, gold goes into that category even with other commodities. Gold is a metal, but you know metals are under commodities. So if you choose to trade that category of securities, there are two things that you have to put into consideration that you have to categorize or make sure that you're following in your trading. The strategy you're using doesn't matter, but make sure you're following these two things. One, make sure you're trading or taking trades where there's liquidity, meaning that you're trading at the base or at the brim. Like, what do I mean by that? I mean that you're taking trades at the lowest point possible, right? Or you're taking trades at the highest point possible. Meaning, if you take at the highest point possible, you're taking at a very good point of resistance or supply, or you're taking at a very good point of demand or a support, right? So the second one, I've spoken about liquidity. Then the second one, make sure that you're moving with the trend. Do not try to counter trend when you're trading commodities, stock indices, and metals like gold, right? Because they are so heavy. The moment any slight thing goes in, your capital is gone, right? So in this video, I'm going to be showing you practically by doing a breakdown of gold. We've been doing gold a couple of times. We spoke about it when it was supposed to come and make a test of this improper of this false breakout. You can just scroll through and check the videos. This improper, this false breakout here, this one here, right? And this is liquidity that I'm talking about. One of the examples. The market broke and made a false breakout, so we had to come and test. I spoke about this and how you have to deal with this trade coming to retest this M. We have spoken about rules of M's and W's on this channel. You can just search about M's and W's. You'll be able to see the whole topic there that I explain them in detail, right? So I've already given you the rules. Just a reminder. One, trade where there's liquidity. Then two, trade with the trend. If the market is trending upward, meaning making higher highs and higher lows, make sure that's what you're trading. And trade continuations. Don't trade reversals or retracements, right? So let's start by doing a top-down analysis because we have already spoken about the two things you should consider in case you want to trade it properly and consistently, right? So let's start with the top-down analysis. Then we put into consideration those two things I've spoken about. We're going to trade with the trend, following the continuation of the trend. Then secondly, we're going to identify where the liquidity is, in this case of gold, right? So starting from a monthly time frame, we know monthly gives us direction, but you can choose your time frames. So we're going to use monthly, then weekly for those who do long term. I normally give you both of them, long term and mid term, or intraday, that is daily. Then W is for the long term or swingers, right? So starting from the monthly time frame, what we observe, let's identify our direction. So we have a W here. What type of W is this? We have this W that created a low, then a high. So this is the type of W created this low, and then it broke this neckline, right? So what do we expect? We expect the market to give us a pullback before either making a lower high or double tops or even a higher high. But now what is happening here is the market has not made a proper retest. The market touched here, yes. I know people are going to be saying, let me just change the color here. Now someone will be saying, but the market has tested here, yes. It has tested, but we need the market to make a proper test before making a decision. They have to make a lower high or equal highs or even a higher high. But by look of these things, gold is bullish because the market has made a high, higher low, high. It didn't take out this low, so then again it has made a high. So there's a possibility we're expecting a higher low into this area here for a proper retest before we can continue, right? So that's the direction in monthly. We need market to give us a push down here before we go upwards. So we're already fulfilling one of the reasons, one of the rules I've given you. Make sure you're trading with a trend. So here we're upwards, meaning we should only be looking for upward movements. So now let's go down to the weekly time frame. What do we observe? So I remember we talked about the market coming down to test this level here, which it has done, right? We had a false breakout here, right? And then we spoke about it. Then we created this M in the process. When it touched here, we expect the market to come to the retest or to come and create double, triple tops here. But in this case, double tops, this one and this one here. So the market tested the neckline and it is rejecting, right? So I'm just going to clear this here just to adjust and continue with our analysis. So we know that now we have adjusted our level. We need the market to come back and test this area. Yes, you can see in the monthly, we said that the market had tested. Yes, this was the test that the market was making. But now we can observe that the market is making a struggling push down, meaning the momentum is weak. So we wanted to find a base, we wanted to find a level where there's liquidity. Now, the market maker knows most people have forgotten that down here, there was a level the price touched. You're getting it? You can see even first came and created this false breakout here, so that people were trapped into this buy move and then it came back to test the broken level, the false breakout. You can see here, people lost money there. So according to my years of trading, I expect still that the market could come back down into this liquidity area here, right? I know someone is going to be asking or saying, that's not how we identify liquidity. Every method has a way, its rules and the rest. So if you've been following our teachings, you must be knowing that how do we identify liquidity using structure? Simply by identifying false breakouts. And here we are saying that this test here, according to the directional time frame, was not a proper test, and we have a false breakout, meaning we have liquidity in this area here. Are you getting? This resistance pushed price down, false breakout again above, then we tested. But we are saying this test was not so good. So we need, if the market can give us a push down here, it would be very best. Now, someone may be saying, what if the price does not come here? Then we do have our resistance area. We need price, when price breaks above this resistance area here, then we shall be looking for the buy above that area. Are we together? So you can just mark it like this. So that's what we have in the weekly time frame. So let's drop down to the daily time frame. So weekly and monthly speaking the same thing. Now let's drop down to the daily time frame. Now daily time frame, when we can just adjust, you can just adjust this area here to make your slab not so big. So when we're speaking about the daily time frame last time, I gave you two alternatives, that if you're using swing or you're using daily, we have a market that created a low, lower high, low, equal highs, then low. So the market had not tested this area properly. So when we broke down, we came back and tested it. So meaning that we have a very crucial area here. So I'm just going to mark it for you. We have a very crucial area here, which currently the wick is again below. Let me just show you. The market created a low, lower high, low. We tested it and again we broke above to make equal highs here. We closed below, we came and tested. So all this, what is the market? Why is the market doing all this? Because you can see it's creating a support to trap people here so that it can drop down and come to the level that we want it to come back to. Remember, our slab was big. I've just adjusted it, this whole area here, right? So someone may be wondering, why has the slab become small? So this is our area we want price to come back down to, this area here, this test here. We want the market to come back and test properly. So this is the area we're interested in before we can be looking for longs. If it breaks aggressively, it's okay, we shall react. Remember, in the market, don't force things. You have to just react to what the market is showing you. And we are saying if the market doesn't come down to this level and instead turns, we shall be looking for the market when it breaks above these highs. Then on a retest, we can be talking about taking buys above there. But remember, we just mentioned that if you want to be consistent, make sure you're buying at the lowest points possible or selling at the highest points possible, right? So we've already identified that area. So from this point, I expect the market to go down, right? So that's the daily time frame. Now let's check what the entry time frames are saying, because apparently monthly, weekly, and daily are speaking the same thing. Now next week we have CPI, and the CPI of next week I expect it to hit both sides, right? That's my expectation. I'm not saying what's going to happen. So there's a possibility with this hidden structure here, because we have a hidden structure in the daily time frame. I will expect that the market may give us a test into this area before coming down, right? Or it may even go slightly above before coming down here. That's what I'm expecting, right? But if it aggressively goes up and breaks all these highs here, and then on a weekly test, then we shall be continuing with our buy. Remember, the overall movement of gold I showed you on monthly is upwards. So this is what I'm expecting. Let me just repeat, the market to push into this box and then comes back into this liquidity area. Remember, we have said this is our liquidity area. It will be the best possible way, level, to take the price from, the buy from, if there's a change of trend. Do not just take a trade because they reach this area. Wait for the market to change trend. I've explained in more than 2 videos what a change of trend is. I've also given you more than one way of taking trades, right? So please make sure at least you see those rules happening. or even if you have your personal rules, these teachings that we do here, I'm sharing with you what I know, but you can add on to this, then you make it, you even become better, right? So let's check H4, one of my favorite entry timeframes. What is it showing us? So currently we have the market making a low, lower high, low. We came and made, we tested this point here. Then we broke above, retested it, made equal highs, came back, triple high, and then we broke down. We came back, test this point. So there's a possibility maybe wanting to continue down. But like I've said, I expect a deeper correction before the market breaking these lows. Now, you don't want to start selling at these support levels because you can see we have a diagonal support here. Also, we have a horizontal support here. You don't want to be selling at support. You're getting it. Instead, you want the market first push higher. That's why we're saying take trades. If you want to take a sales, take it at a highest point. For example, here, this point here is low compared to this point. This is a high point if you want to take a sell, right? But if the market first breaks below this point here and retests, this would be a resistance, meaning you're taking it at a high point. So these are your two alternatives. Let the market first give us a push into this area, gives us a change of trend, and we can look for sales. Or the market breaks below here on a retest, gives us a change of trend, then we can take here down. If the market goes up aggressively, breaking the highs that we looked at in the structure time frame, then wait for a week retest, change of trend, then we can be looking for buys. We're together. This is the beauty of understanding exactly how everything is done, not to wait for someone to tell you. That's why when we're explaining these concepts, we try our best to go in depth, right? So those who trade gold or who want to understand how to trade gold, the takeaway from this is, one, make sure you're taking trades where there's liquidity. By liquidity, when you're trading market structure like us, or if you've been following us, we are targeting those levels that the market didn't test, false breakouts or untested areas, levels that are not properly tested, right? That's one. And secondly, we want to trade with the trend. And I've always emphasized that trade continuations, they're the better alternatives. Are we together? Then we have also said that you have to do a top-down analysis. When you're doing analysis, make sure you're using the timeframes correctly. We have a video on that. So do not, even if you're creating your own timeframes, make sure you're developing timeframes following the rules. You need to have a timeframe of determining direction, then a timeframe of structure, then your timeframes of entry, right? So that is it. I hope it has really helped you in case you want to trade indices, stock indices, and a heavy category of instruments like commodities, which also includes metals like gold, silver, and the rest, right? I wish you guys a nice weekend and a profitable week ahead.